All right, Caleb Barney with Russell Real Estate here, and today I just wanted to go over one of the more overlooked items that I think people who are looking to invest in real estate don't pay as much attention to as they should. So the big four things that most people typically pay attention to for investing is going to be cash flow, appreciation, tax benefits, and the loan paydown. And those are all good things to keep in mind. Of course, you want the property to be cash flow positive where you're not coming out of pocket to pay that mortgage every month. The home price appreciation, I think, is actually what will make most people be able to retire if they have, enough properties then. And then obviously the loan paydown will be building equity for you, and then the tax benefits, whether it's a cost segregation or anything of that sort, would also help you build your wealth over time. But one of the more overlooked items actually has to do with that home price appreciation, and it's just that real estate is truly a great hedge against inflation, and this happens in two ways. So the first way is with that home price appreciation. Basically, you could do nothing to the property, and just with the value of the dollar going down over time, that property value is going to go up over time. And essentially what I mean by that is over time, it costs more and more dollars to pay for the same thing. Depending on your age, you might remember when it was $1 per gallon for gas, or, whatever the price was for milk or eggs. And now you're looking at gas prices at, $3.60 a gallon, or whatever the price is today. So over time, it's just going to be, you're going to require more dollars to pay for the same thing. And the same thing can be said of housing. So you could buy a $100,000 house, and in 20 or 30 years, that might have tripled in value depending on where you bought. So that is the amazing hedge against inflation right there. But that only takes it into consideration if you're buying it as a primary residence. What I'm talking about, and the overlooked portion, is when you're looking to actually rent out a property. And the part that I like about that is, if you think about it, rent prices are going to go up over time as well. You're even if you're not really keeping up with market rents, you're still going to increase it. Like, do you think that your rent price will be higher or lower in 5 years? Or higher or lower in 10 years, 20 years, 30 years. So basically, if you bought the property with a 30-year fixed rate note, your monthly mortgage payment, say it's a $1,000 mortgage payment, and you're getting, $1,800 a month for your rental property. Well, in 3 years, maybe you're getting $2,100 a month. In 10 years, maybe you're getting $2,500 a month. Your monthly mortgage payment, though, is basically going to stay the same, with the exception of if your property taxes and insurance are included in that number, then that's going to go up over time as well. But for the most part, everything else, like your principal and interest payments, are going to stay the same, but your cash flow is going to increase because your rental income is going to increase. So that's the really cool part about real estate investing that I think is often overlooked, because a lot of people, they want numbers to pencil out immediately. So they might be going off of metrics like, I need to make $200 of pure cash flow per door, or I need 8% or greater cash on cash return. I need whatever metric they're using, but they're only looking at the year one metric and not the long time horizon of, if they're planning on keeping that property for 5 or more years, what do the numbers look like then? So if you can survive, and make it work within the first couple of years, chances are it's only going to get better with a long enough time horizon, assuming you didn't buy a lemon of a house and that you bought it in a decent area. So that's just my thought of the day. If you have any questions in regards to buying, selling, or investing in real estate in the Northeast Ohio market, feel free to reach out. Thanks.